Everybody, welcome back to Third Wave Trades. For today's video, I want to go over Tesla, ticker symbol TSLA. We'll take a look at it from a macro viewpoint, kind of just zoom out and see how exactly we got here. And then we'll zoom in and see where we stand today and where we're potentially headed. Like I say in the thumbnail, we're kind of at a crossroads. It's a critical point, and I do believe a big move is coming. So we'll get into that, especially with the wave count. We'll see where we are in our Elliot wave count, and we'll see if there's more upside or downside. So before we get started, just quick disclaimer, guys. I'm not a financial advisor, and this is not financial advice. Trading carries a lot of risk. Please do your own due diligence and research, and/or consult with a financial advisor before you guys make any trades. And secondly, I just wanted to thank everybody so far who has subscribed and commented and liked my videos. It really means a lot, guys. I want to get to the point where I can do live trades, but I think I need about 50 or 100 subscribers or something like that minimum before I can actually start going on live. So please continue to like and subscribe if you guys really like the content that I'm providing you, if it's helpful in any way, and comment and let me know, what you think I should spend more time on. If you guys feel like you want to hear more about how I'm getting my counts, you want to hear more about Elliott wave theory in general, just let me know what you guys want to see, which ticker symbols you want me to do analyses on. I'll be more than happy to get those videos out to you guys. Okay, so let's get into it then. Tesla closed at $185. It was down about 0.5% for the day. Not a major move on Friday, and we can see here we've kind of been sitting in this little consolidation zone around $185. So we're going to come back to that and see where we're headed, right? I have these levels kind of drawn out over here, 200, 150, and then the price, the low point at $101, which is where we pivoted in January of this year before we went on this massive rally all the way to $217. So just to show you guys kind of like where we are in this picture of things. But in the grand picture of things, like zooming all the way out, this is what I want to show you guys. So this is Tesla stock from the time that I guess it IPO'd all the way back in 2010. And this is done on a logarithmic scale, right? And that's kind of a good way to sort of get a macro picture when doing the Elliott wave count. What it looks like is that going all the way back to 2010, right? We did this 1, 2, 3, 4, 5. That made up our first wave in the macro. We corrected a little bit down here, and then this is where we had like the major Tesla rally. Happened in 2019, 2020, 2019 is where it started, and it really hit its peak in 2021 during like the whole meme rally and 2020 rather, the whole meme rally when we had everything flying like GameStop and AMC and all those meme stocks I'm sure you guys are all well aware of. So that was our third wave in this macro count, and if we break it down, we could see it. This is a monthly chart, by the way, guys. Actually, let me switch to a weekly so we can get a little bit of a better understanding of the waves. So from here we could see we had a sort of 1, 2, 3, 4, and a 5, where we peaked out at $430, right? And then since then we've been correcting, right? Which was this fourth wave, and now in January I believe we're starting our push up to the fifth wave. So let me go ahead now and switch this from logarithmic back. So yeah, so this was our third wave, guys. This was our third wave from 2019 to 2021, October 2021. 1, 2, 3, 4, 5. You could count this third wave even as 1, 2. It's 1, 2, 3, 4, 5. You know, like I was telling you guys in my last video in the Mara update, Elliot waves are fractal in nature, right? So if you have an impulsive 5-wave move, each impulsive wave in that larger impulsive wave is going to be made up of 5 waves as well, and so on infinitely. So that was our 5-wave move there, and then this is the correction. This is the tricky part. You know, is this correction done? I personally believe that it is, and I'll show you what I see. I believe that it's a WXY correction, right? And a WXY is a sort of complicated correction that's made, that's basically two corrections connected. So a normal correction would be an ABC right here, 3 waves connected by an X wave, which is usually another 3 wave, and then another ABC correction right here, right? So that is the move that we've had since our November 21 high. Yeah. So basically in what was this? In January, I believe we hit the bottom of what this correction was, which again was a 4th wave correction, WXY, made up of two connecting two ABC corrections. Now, if we measure that based off of the Fibonacci retracement tool, we can see from the bottom of the 2nd wave to the top of the 3rd, that gives us a pretty steep correction of this 3rd wave, right? Usually a 3rd wave doesn't correct that steeply. It usually corrects about to the 38.2% of retracement level, or the 50% retracement level. For it to come to, this is something that you see more after a 1st wave. Like a 2nd wave correction is usually a lot steeper, which kind of, you know, would make maybe some people consider this whole thing as a 1st wave, and maybe this is a 2nd wave correction, and then we get a large third impulsive move here. But if we do that, then the price action from the very beginning back in 2010 doesn't really like match up or make sense to me. So I kind of like it how it is this way. And then there's also the law of alternation, which I'll talk about, and that's basically saying that if the 2nd wave was a steep correction, then the 4th wave correction will be a flatter correction, and or vice versa. So it's not that the 2nd wave always has to be the steep one and the 4th wave has to be the sideways one, but it usually is the case. Over here it looks like maybe the 2nd wave was more of a sideways correction and the 4th wave is the steeper correction. So all right, so that's that, right? Like that's where I believe we are. We hit the top of the 3rd wave, which is the major impulsive move of this run, and then we corrected. I believe the correction is over, and now since January we're starting a 5-wave move up. Now let's go back to, this is where we are then, right? This is the January low of 100 and what did we hit? $102, okay? And from there we rallied up. I don't have the wave count on here. I remember doing it, and it was pretty straightforward, honestly. I just deleted it because my chart was getting very cluttered. But I'll draw it again for you guys. Where is that? All right, I'll draw a quick wave count. So we had a 1st wave, 2nd wave, I believe this was the 3rd wave, 4th wave, and a 5th wave. Let me change the degree of this. Alright, so that's what we had. This is the daily time frame now, guys. So that's our 5-wave count for this larger 5th degree wave that we're in now, right? So what does that mean? That means we did a 1st wave up, and now we're doing a second wave down, and then we're going to get a large third wave up relative to this first wave. All right, we should get a third wave up, then a fourth wave, and then a fifth wave. And what will that look like? Well, it all depends on whether or not this correction is over or not, right? So if this was our first wave up, then all this is the correction. Is the correction complete or not, right? Now, let me go to here. So if this is the corrective move, excuse me guys, if this is the corrective move, ABC, then we are done with the correction, and then we started over here, we started a new 5 waves up. This is our second wave down, and then we would be very bullish moving up. All right. The question is this done or not? And personally, I don't think it is, but we'll kind of get into that. Let's just play this out. That if this is the first wave done, then we would get like a 1, 2, 3, 4, 5 over here. This would be our second wave down, and then we would be moving up. So then we would get a third of third, right, which would be very bullish. And that's why, like I say, this 200 level is crucial, because if we get to this 200 level and we break that, then there's a very good chance that that is exactly what we are on. Conversely, if the correction is not over, then we have a larger move down coming, right? We have a big move down coming, and it would play out something like this, where we kind of like what we saw in the macro count, we would get a WXY that's connected. So we have an ABC, then this is our X wave connector, and then we get another A, B, C, down to somewhere around this $150 level. Now, I believe that that is the more likely scenario of what is going to play out. And the reason why I feel that is just most elements of like this wave pattern are pointing towards that, right? So the very first thing that we can do is use Fibonacci. So if we apply the Fibonacci from the bottom at the 102 level to the top of this wave, it's 217, we see that we get the 61.8% level right here. Sorry. All right, so we get the 61.8% from the 50% to the 61.8%. And I'm going to make that orange because that's something that we like to call like the golden zone or the golden pocket, all right? So that's what Fibonacci is telling us would be a good retracement, because this would be a second wave retracement of this first wave up, all right? Second waves usually fall back to the 61.8% retracement level, which puts us at the range, we'll just say between $146 to $159, okay? So that's our first bit of evidence. The next thing is, like I mentioned before, is this gap fill, right? This gap zone over here. Right here between this candle and this candle, we have a gap. Now, we know gaps usually get filled. We don't know when they'll get filled. They can get filled years and months from now, but they usually do get filled. And because that kind of is coinciding with the Fibonacci level of the retracement, I'm very much in favor of this actually coming and filling sooner rather than later, right? So because it's going to act like a magnet, and it's going to pull the price to fill that gap before we move up. And the reason is because long term, guys, mid to long term, I am bullish. Like, I believe the third wave is coming. This was the first wave. We're going to get a second wave retracement, and then we're going to get a large third wave moving up. But if we were to move up from here right away, right? If we were to move up from this point on, do a 1, 2, 3, and just go straight up, then that's really leaving a long time before we end up, because then we have another fourth wave and then a fifth wave, and then eventually we're going to come down and fill this gap. You know, I just don't see that as likely. I think the confluence of the Fibonacci level and this gap fill being, like, you know, coincidentally in the exact same level is very, very convincing to me that we are coming down to this level. Now, another thing is just we can use the wave count in and of itself. So let me just actually hide these. All right. So the wave count in and of itself, we have this ABC correction over here, right? And if this was the complete correction, it puts us in a 38% to a 50%. Again, it's not impossible, but it's not. There just still seems like so much more room for the downside. Now, if this is a WXY correction, it has all the makings of it, right? And it's kind of what happened on the macro scale. And because we believe that price is fractal and it's reoccurring, this is very similar to the larger picture that we just saw, where we had the WXY and two ABC corrections, right? It's this would be a zigzag, right? This would be a zigzag. This would be probably a more complicated, this would be probably a WXY within a WXY, and then over here we would get an ABC. So let me probably go into a closer time frame so we can analyze that a little bit more. All right. Okay, so there's our X, and all right, so here we have an A. Now, I'm not sure if the B is done already or it's not, right? Because if we're counting an ABC, right, this one looks like it would be a zigzag because we have 5 waves down. So we have 1, 2, 3, 4, 5. Then we get 3 waves up for the B wave, and then another 5 waves down for the C wave. So it's possible that this B wave is done over here, guys, at 191, and then this is our first wave down, second wave, third, fourth, fifth. Right, let me draw that out. So this is our A wave, this is our B wave, and then we get 5 waves down to this gap fill area, right? So that could happen relatively soon if this is the case. If this was the first wave of the C wave down here, then it's very possible that come Monday morning we flush right away and we get a large move to the downside, or the other option, which I wouldn't be surprised of, which is why I'm not in Tesla right now. I'm not. I want to just be more confident that this B wave is over, and then maybe I will probably play a C wave down. Is that this B wave? This could be. The B wave is made up of 3 waves, right? So it could probably have a little bit more upside, come back up to like 190-ish, and then from there, then we start our C wave, 5 waves down, right? So that's kind of like zoomed in a little bit, and that is the count that I'm favoring, guys. So I do think we see 150 before we see 200 again. I could be wrong, right? Like I said, the other possibility is that this was 5 waves up, but then that kind of, it doesn't look too convincing. Right now, this just doesn't look too impulsive to me. Another thing that we can go on, guys, is volume, right? So if I go to the daily time frame over here, and I'm just looking at the volume in and of itself. The impulsive moves are going to carry the most volume, right? So look at the volume over here. Look at the volume over here in this area as prices in this impulsive wave, right? With a high here in our third of third, right? That's good volume. Now look at the volume over here, where we've been sort of like in this corrective move. Volume has been kind of, it's been low, guys. It's been very low, right? As price has been kind of like zigzagging back and forth. So if we saw a large, if price closed high, let's say this coming week, above like 190, 195, and we see volume significantly pick up, then that might make me think, okay, we've already started the wave up, the third wave up, and this would be then a 1, 2, and then we get a 3, 4, 5, and then that would be the third wave of this first wave, and then we'll get another 4-wave correction, and then 5 waves up, right? I would need other things to indicate that to me. Like I said, like increase in volume, strong price action, and then I could probably make sense of the wave counts, and then I act accordingly, right? And anything above this X wave, above 207, I'm automatically, that's going to be my count now. If we get above 207, I'm going to adjust my count, and I'm going to say that this was the completed correction. This was the first wave up, second wave down, and now we are bullish, and I'll go long from there. But until I see something like that, like really changing my mind, like something very strong like that, I'm going to play this for the downside, and I'll play the downside, like I said, when I see that we are moving a little bit lower here, and I'll try to play the C wave. I'll try to get in on that and play it down towards this gap fill area, which coincides with the 61.8% retracement of this large wave. All right, so that's how I see it playing out for now. Like I said, it's always subject to change based off of price action. Price action doesn't have to do what we want it to do or expect it to do. It does what it does, and then we react accordingly. We use Elliott wave theory to kind of give us options, and I think that's like people who are critics of the wave theory, I think that's what they fail to see, is that we are just kind of using wave theory as a process of elimination. We present certain possibilities that can happen, and then as the price action plays out, we know to eliminate possibility A, B, C, whatever, what have you. So as we go on, we narrow down the possibilities more and more and more to, now what's left, no matter how improbable, must be correct, right? So I think that's what a lot of people fail to understand about the wave theory. But for me, it's going in with that mindset. I don't take it as gospel. It's not that price action must do what wave theory is saying. I use wave theory as a sort of guide map to get in on my trades, and I'll go over in those videos kind of like how you can use wave theory for good entries and exits and things like that. But for now, for Tesla, that's what I have, guys. I do see more downside coming to possibly fill this gap, but it's all going to depend on how price action behaves in the next couple of days and where it goes. Now, like I said, short term, we could see a move to the upside, but unless it can come back up here, which would just finish the B wave, right? It's come back up to like 195, and then we get the 5 waves down, right? So if you were bullish and you wanted to play a strong move, I would just be careful of that. As we can see also over here, I don't really talk about them that much, but I do have moving averages I have my 21-day moving average and my 50-day moving average, and it does and up here is the 200-day moving average, and we could see like price is getting, we look like we're about to get this crossover right to the downside, which is another bearish indicator that price is going down. So just be cognizant of that, guys. I wouldn't be long Tesla right now, for unless you're scalping, right? It's perfectly fine to scalp it. Like I said, you see a strong move up, you scalp it, take profit, get out. Short term bearish, medium to long term bullish. That's my take on it. And then if we do want to see, we could come up with some sort of price projections using the Fibonacci tool. If we do presume that price will come back down to this $150 level or this gap fill area, we'll just use $150 for now. More or less, we can start from the bottom of the first wave, go to the top, and apply it to the projected beginning of the third wave, and we see, guys, this 161.8% extension level is taking us to $336. So long term, medium to long term, I am very bullish that we will see a strong move up to this level. The other possibility, and I don't want to get into too much because I don't want this video to be too long, we could talk about it, is that this whole thing was an A wave, this would be the B wave, and this would be the C wave, and the larger correction on the macro count that I was showing you guys in the beginning of the video is not complete. That was A, this would be the B, and then we'll get a C wave down. So that's still, I guess, on the table as well. I don't think that that's as likely, but I do want to just put it out there. And in that case, we could at least still expect maybe a move to the $265 level, right? That would be a more safer, more conservative number to have in mind for once we reach this bottom, that we could go long to possibly a one-to-one level of this first wave, which is 265. All right, guys, so that's what I got today for Tesla. Sorry if that was a little long and rambling. I will try to make my videos a little bit more concise in the future. Let me know if you guys like the sort of way, or do you guys want me to like cut out some of the thought processes that I'm having in my head and just give you like straight answers and levels and things like that. Ideally, I would like to keep my videos like around maybe the 10-minute mark. So far, I've been going up a lot higher, so I will try to work on that. I do have more videos that I'm going to be putting out. I'll be putting one out for NVIDIA, do a follow-up on Mara and the mining stocks, and I may do one shortly on like SPX and SPY, and triple Q, like maybe some of the indices. Not sure. If there's other stocks that you guys want, please let me know. There's a couple that I'm looking at, and I'll put those up for you guys shortly. All right, so thanks guys for watching. Please like, comment, and subscribe, and I'll be back soon with more videos. Peace.